is Saanvi Gullapalli.
This is Suha, Parvathaneni.
And today we're doing a video about gold.
Why invest in gold? Gold has been a store of value for centuries, and its popularity as an investment has increased in times of market volatility, inflation, and geopolitical uncertainty.
So what are some advantages of gold? Number one, it's a safe haven asset. Gold tends to retain its value or increase in times of economic crisis. When traditional markets or stocks or bonds are in turmoil, investors often flock to gold for safety. Number two, it's a hedge against inflation. When inflation erodes the value of paper currency, gold is often seen as a way to preserve purchasing power. Since gold is a tangible asset with intrinsic value, it can keep up with or outpace inflation over time. Number three, diversification. Adding gold to a diversified portfolio can reduce risk. It behaves differently from stocks or bonds, and it typically has a low or negative correlation with them. This means that when other investments drop in value, gold tends to remain stable or appreciate. And last, liquidity and global recognition. Gold can be sold quickly around the world due to its world recognition. Its liquidity makes it an attractive asset for those who are looking for easy access to wealth in times of need. Suha?
Considerations when investing in gold. Market volatility. While gold is a safe haven during crises, its price can also experience fluctuations in times of relative economic stability. Next, gold's no yield. Unlike stocks, bonds, gold doesn't generate income such as dividends or interest. Therefore, your returns come strictly from price appreciation. Management fees. In gold, ETFs, or mutual funds, there are typically ongoing management fees, even though they're usually lower than traditional investment funds. Capital gains tax. Depending on your country's tax laws, profits from the sale of gold might be taxed at a higher capital gains rate than investments in other types of assets like stocks or real estate. Saanvi?
So what are some factors that affect gold's price? Number one, supply and demand. Mining production and market demand both influence gold's price. Number two, economic conditions. Economic instability often drives gold's price higher as investors flock to gold for safety. Number three, inflation and interest rates. Higher inflation often boosts gold's demand, but higher interest rates often makes it lower appealing than yield-bearing assets. And also currency movements. A weaker US dollar makes gold more attractive as it becomes cheaper for foreign investors. Suha?
Why is gold valuable? Rarity. Gold is relatively rare, making it highly sought after. Durability. Gold does not erode, rust, or tarnish, maintaining its value over time. Universal acceptance. Across many cultures and borders, gold is recognized as a store of value. Inflation hedge. Gold is seen as a good hedge against inflation as its value tends to rise when paper currencies lose purchasing power. Economic stability. During economic downturns or geopolitical crises, gold often serves as a stable asset. Saanvi?
So what's the current trend in gold's prices? Gold's unbreakable record-setting rally so far isn't likely to slow down anytime soon, as the market casts for economic safe havens. Gold's been up for 7 consecutive weeks, and its futures have been up 8% year to date. Now, there's a lot of factors for gold's recent strength. Some of them are inflation concerns, persistent geopolitical uncertainness, steady demand from central banks and retail investors, and also central bank easing. The United States holds the world's largest gold reserves, approximating about 8.1 thousand metric tons. And that's it for today. Thanks for watching.
Bye.
Bye.